Welcome to Unfiltered Finance, and today we are talking Trump tariffs, and we have Chris Pulver on the show. And I'm excited to have this conversation with you because I've been following you and your thoughts on this. And boy, what a wild ride.
I would just say it's not going to get any easier from here. Continue to have the hard head on in the seatbelt because we just saw a little taste of 2026 with already a market that's pretty fragile. The AI narrative has kept a lot of things intact, and we're talking about this potential Goldilocks age of the economy, but at the same time you're seeing heavy rotation outside of tech. You're seeing a little bit more of the small cap run this year, which is good overall for like the internals of the markets. But Trump with Greenland, the new NATO framework, we're making a regime shift in Venezuela. We're talking Cuba. I mean, this seems like policies that maybe existed in the 40s and 50s, not 2025. And the U.S. is on a whole new agenda, which I think just makes the markets a little bit cautious right now.
Well, and the other part about that is it's ever changing. It's like just when you think you got your feet underneath you, there's something else that happens. It's like I was looking at headlines and some of the, what was happening yesterday going into this interview, and then I wake up and it's like, oh, now there may be a tariff on French wine, which would be horrible for me. But like, what's next? You kind of can't stay on top of it. But your thought is if you live and breathe by the headlines, it's going to be a bad day for you.
Well, it'll just drive you crazy because it's gonna push your emotions to make the decision where you're gonna sell the lows and buy the highs. And rather, what I think the best thing for traders to do right now is, I said this is like you've got to see the forest through the trees. You've got to know that a lot of this is going to be noise. My best strategies for 2026. Honestly, I think that we're going to have a lot of potential like small flare-ups in the volatility index. So if we go like this I mean, we hit the lowest volatility index of the year in December 2025, right before we ended the year. And then we just had a flare up into 21. And then 21 is retreated back to 15. So the VIX alone, if we have a move from 15 to 20, 15 to 20 multiple times, the market's still going to find a way to grind higher. And so I'm playing with a lot of margin for error, a lot of forgiveness. I am using April 2025 lows as one of my and that's like stocks and indexes around. If I can sell premium, for example, as an option trader, and I can go out 6 months or 12 months and I can get some premium below those April 2025 lows, that gives me lots of room for error. So
Well,
all
and
the noise, all the ups and downs could still benefit me really well.
for people who may not know, April 2025 is an important month. Why?
I mean, that was our Liberation Day drama fest that I think all it really started out was a concentration risk in Mag 7 that needed a bit of a rotation. And then all of a sudden we throw a global trade war on top of that. And so the markets went from about a 10% correction to a 20+% correction. And if you look at here's a good chart to look at. Look at the April candle, the April monthly candle for 2025, and it is one giant wick to the downside. That was a 15% drawdown, and that was within the first like 7 to 10 days. And then the rest of the month was straight up, and we have been persistently bullish since the bottom in April 2025. So big, important month and kind of a milestone support level where I don't think we get back there without some major problems, but any type of sideways 2026, I'm just going to try to get as much income as I can while the market is still like resilient at these highs, as opposed to I don't want to play in the noise of this market, plus or minus 5%, plus or minus 10%. If you're looking at index trading, especially, I think it's just going to be a very noisy year.
So is this a situation where it's like, look, I cannot get into the minutia. I cannot stay up to date because it's almost impossible to stay up to date because he tweets and then something changes and then the market goes down and then he tweets something else and then the market goes up and then it's a whole thing. Are you saying it's better to like, let's take a step back and play the bounce where it's like, okay, we're down right now. Let's buy. Let's
Yeah,
see what happens. And just follow it that way as opposed to getting into the why.
yeah. If you get into the why, you're never going to know why, because most of the time as a news trader, news is always a catalyst that you find after the fact, right? Like it's like, why did that happen? Oh, I can find a news example of maybe what's attached to it loosely or directly. But if you had to trade off the news, it's already priced in. I mean, you got to believe in these markets where it's like there is efficiencies built in the markets. There are levels that the market should go to, should not go to. There flows and liquidity to the tune of hundreds of trillions of dollars. It's like we can't let one individual really dictate how we're going to go into a 10 to 20% correction. So that's what last year felt like, which was, oh my gosh, the US is, putting the whole world on alert, and then it's not. And it really was like I mean, this is kind of how it summarized last year. Right? We went from trade war to trade more, and I think that this whole green work or this framework for Greenland and maybe Cuba, it's like I have no idea, but it's like I'm not going to keep up with what country's next. I think right now this is a kind of a Hail Mary attempt for the U.S. to maybe take some of the rare earth minerals control, national defense and AI. I think that we realize we're behind on infrastructure, and this is our way to put all systems go to try to accelerate and catch back up. I mean, we could argue that China's ahead of us in certain categories, but they're the world's manufacturer, we're the world's consumer. I think we need to be frenemies forever, and nobody really acknowledges that, but we need to get along. And the optics are always like it's communism versus democracy. It's really they make things, we buy things, and we're trying to now maybe onshore some manufacturing, have more AI, be the biggest and best country in the world. It's a lot of bravado we have in the U.S. I just don't know if internally, infrastructurally, we really are the best. But we're clearly putting an agenda together to try to be better. And that's not a bad thing, but man, is it really disruptive and really noisy.
I mean, it's like a ride you feel like you can't get off of. I want to read you a couple of headlines that I've
Yeah.
heard talking about how the Trump tariffs are going to send us into a global market meltdown. It's a costly shift for consumers, and that the violent swings are a warning sign. I mean, is there any truth to that, to either of those?
I think there's risk to that. I think that feeds into the uncertainty narrative. I think looking out to this year, I think the market is quite fragile. I mean, the U.S. economy, especially when we look at the stock market, our valuations are at like the 1 percentile of highs. I mean, we have a very high valued market, and it's difficult to have so many stocks kind of priced to perfection, and they have to continue to outperform at a major clip in order to justify these gains of what people are paying for them. It is, I mean, on paper, it is better price to earnings to go into Europe. It's better price to earnings to be in Asia. It's better price to earnings to be in India. The problem is those markets aren't as liquid. And I mean, for me, it's like I'm an option trader where I love option liquidity, and I don't get that in international markets. I like having the EFT exposure. I like trading ADRs. And those are just foreign investments where I want to have some exposure in the non-US plays, but I like to generate premiums and income on some of these SPY trades or some of the Mag 7 even. But so much uncertainty and volatility of even if we have a major rotation, Emily. I mean, a rotation into what right now, small caps are up 7-8% year to date, outperforming the S&P. I will say this: of all this talk of tariffs and uncertainty, all the headlines, the one thing it is tried and true right now is look at gold, look at silver, look at copper. Like those are the craziest trades right now that just don't seem to stop going up. I will have one warning out there. I have one warning for gold traders, and it's not a bearish warning, but it is a correction warning. There is a 200 period moving average on the daily time frame, and we're sitting about 570 bars away from it. And that's a long count where we didn't have that type of stretch away since like the great financial crisis. We saw gold back in 2009 to 2011 run up to like 600 bars, and it corrected over 20% and put in a multi-year top. So all I'm saying is right now, gold is at all-time highs. Silver is at all-time highs. I could see a correction of probably 20% in gold. And because of silver volatility, I'd say maybe double that. I could see like a 30, 40, 50% correction in silver. I still want to buy gold and silver. I like what the narrative is around those, but I cannot chase these all-time highs. I just closed out a campaign trade from a 3-year bull run, and I closed it out last year, and I'm still like lightly participating, but I'm just trying to get better entries if I can.
Well, I mean, the thing about it is for investors who maybe aren't as advanced, who aren't sitting in front of their computer all the time, what do you feel like the key takeaway here is? Like, there is so much fear mongering
Mm-hmm.
around tariffs, which, by the way, may not even be legal if the Supreme Court ever decides to issue their ruling
Very
on them.
true. Very true.
Um, what is your advice to somebody who's like, I don't know what's up, I don't know what's down, I don't know when to sell, I don't know when to buy, and they're almost like paralyzed by
Yeah.
everything.
Yeah, that's a great question. I think right now, one of the biggest advantages you can have as a trader is to have some cash and dry powder available. For example, like last year, as we got into the end at the end parts of the year, I was pretty bullish just based on flows, and we were up near all time highs at 7,000 levels, pretty sticky in the S&P. But as we got into the end of the year, I've just been letting profits roll off. raising cash. I'm probably sitting in 60% of my portfolio is cash right now. And it's getting like a, unallocated cash bump of like 3.5 to 4%, which is fine. But when I need it, I pull it. The reason I'm saying that is because if the market dips 10% this year, or the market dips 15 to 20% this year, I do see that as a strong buying opportunity. I'm still in the bull camp. I still think this is a cautiously bullish environment. Any type of dip, I believe, will be bought like pretty aggressively. So having cash at the ready, that's to me like the most opportunistic way to survive 2026, as opposed to what I saw happen to a lot of traders in 2020, 2021, which would be you're fully invested and you get into 2022 and the market rolls over by 30+% and you have nothing to actually invest at discounts. You're just getting stuck in all these crappy positions. So having some cash at the ready, I mean, I have some pretty smart, friends out there that are talking like they're like 30% allocated to equities. They're, 50+% cash. I'm not a big fixed income guy. I think that's I'd rather be in gold. I'd rather be in Bitcoin. But for stocks and allocations, I'm about 50+% cash. That's just sitting on the sidelines waiting, and with the ability to trade options and use that kind of natural leverage in the options market, I can still do fine. I mean, I could probably generate 15% a year, 20% a year in my portfolio without being fully invested. And if we get a pullback, I'm going to start deploying that capital, and hopefully that helps me generate the alpha that I'm looking for.
Yeah, it's like if you had known the 2008 real estate crisis was going to happen, you could have bought up all the houses
Well,
knowing
I
that they
mean,
were going to
and
just like,
absolutely, and learn from that stuff. I mean, look at 2008. Look at I mean, any type of volatility flare up we've seen 2008. I mean, obviously in hindsight, it's like, well, if I just knew. Well, 2000 was the same thing. The market's down 50%. If you survived the liquidity crash, you picked up the dust and you made a fortune on the way up. And it was a 7-year market that got you back to all-time highs, and you doubled your money.
yeah,
Unfortunately, that was crashed again by 50% in 2008, but then you doubled your money and then some, because we've made all-time highs forevermore since 2009's bottom. Now go back to 2018 with another 20% correction, 2019, 2020, 2022. I don't think it's any different. Our cycles now are so much more geared towards a V bottom by the dip. And look, I fear the trader that wants to buy the 3 to 5% dip is a lot different than a trader like me that's like, I'm happy at like a 10, 20% correction because that's where I think we've got some big discounts. But when the market gives us a 30, 40, 50% correction at some point in the next 10 years, I'll be the trader that's happy to have some dry powder to scoop up those liquidity bottoms and then make that fortune on the way back up, because that is over the last 25 years. It's like how much money has been made by having the bottom like really be participated in. It's not going to be pretty. It's never fun, but that's how you make so much money on the upside.
and to that point, that's exactly what you were talking about, the emotional roller coaster of tariffs, right? Is like
Yeah.
if you have the emotional stick with itness and you can sit in that moment where you're like checking your, your accounts
Yeah.
all the time, but to know, okay, this will eventually recover. We'll come out of it on top. I mean, let me ask you this about tariffs, and this will be my last question. What if the Supreme Court is like, JK, everything that you guys have been doing, it's illegal.
Right.
Like what happens then?
That's a really interesting just decision, because number one, I think they're going to be, they're going to hear the wrath from Donald Trump, right? I mean, it's going to be super vocal and it's going to be blasted on noise. And I mean, look, he essentially stacked the Supreme Court. So I'm surprised it even is happening. And they've balked 3 times in the last 2 weeks. So I
Right.
don't even know if it's going to be a decision. And if it is, so again, we're talking about this, and guess what that is? It's all noise. Like, I literally swore on one of my sessions the other day because I'm like, are you going to do it or not? Like, don't put it in the headlines. Don't make people think about it. Don't make it show up in the options market as volatility and it doesn't exist. I'm like, then I'm going to stop worrying about it. Like, it's noise. And when it happens, it happens. And truly, if it's unconstitutional, I do think that, the administration has a plan to still try to have like tariffs not be, I mean, I think right now we're bragging about like $500 to $600 billion in tariff revenue. Well, if all that goes away, all we do is we make $0. We have bigger deficits. So if there's ways for the U.S. to somehow recover more resources and add revenue elsewhere, or put another blanket tariff on some, it's like, I don't know what the intricacies are. I just know that whatever they rule, the market's probably going to figure it out. And it's going to be more volatility, more uncertainty. But like I said, even if tariffs were to be the catalyst, and everyone talks about, the next black swan, nobody knows what the next black swan is, right? If the Supreme Court rules and the market's down 10%, it's going to be tied to the Supreme Court ruling, but it's already been this uncertainty that's been bubbling under the surface for months. So
Right.
anyway,
Well,
if it
what if
happens
it
and the
comes
market
back and they're like,
drops,
great, keep going, keep doing what you're doing? Because we haven't even actualized or recouped all of the tariffs. I mean, it's only a
correct.
portion of it. Yeah.
Right. And we're talking these deals are out like years and years and years. And so I mean, we're talking like, oh, with $1 trillion in tariff revenue, it's like right over a 10-year period. So it's like we're barely tapping the surface of what this revenue is. So if they rule it unconstitutional, it's probably worse for the US, better for the world, to be honest, which is why I'm talking about this non-US exposure. But the US will probably still maintain resiliency because we still have a government that is spending money like we're at deficit levels. We have a Fed that's now injecting liquidity into the system for light quantitative easing. And if the US stays stable, the world could outperform, but we're still going to have like a decent US market. It's one of our greatest assets. It's like our markets, everybody's been participating in the US markets and it's outperformed to like 3 standard deviations. But the reality is, yeah, the world has the chance right now to outperform. And I mean, what's happening right now in Japan? Government yields are going crazy, and I think if there's going to be this major repatriation of dollars back into Europe, back into Japan, that's great. I think it's more disruptive to the U.S., but I still think the U.S. remains like resilient, climbs a wall of worry. I don't think we have like a super fragile economy. I just think we're going to have to climb the wall of worry like we've done. And right now, look at the overall sectors. Things are still pretty healthy. The AI narrative is alive and well. Until investors realize or think that our capex spending is too much and there's not enough return on investment, our valuation is too high. That's all in earnings. So, Emily, I don't know what the next like black swan is, but I don't think we really have one. If everyone thinks we're going to a recession, if everyone thinks the market's going to crash, it probably won't. So, I think what scares me more is when people are ultra bullish then I'm more contrarian. I feel like we've got to have some rocky roads ahead, and I'd much rather be waiting for those bigger pullbacks to scoop up when everyone is panicking.
So for everybody who's out there clutching their pearls, they can, while it's still affordable, just open a bottle of French wine, right? And then just
There you
sit through
go.
it.
You know what?
That's
And
the
if you do
key.
that, for me, it's like I was one of my COVID habits, not habits. That sounds terrible, but a COVID side hustle was I was chasing a lot of bourbon back in COVID, and I amassed a pretty
I
nice
think a lot of
collection.
people were.
And what was funny is like the prices and the rarity and the scarcity was off the charts, and now it's like, yeah, I mean, my buddies are sending me pictures and stuff like, oh, this is a cool haul. Like we didn't see this 3 years ago because they were secondhand and bottles they should be $50 and they're selling on Facebook groups for like $500. I'm like, that's over and done with. So I mean, if anything, just go about your business, have fun with your family. Life goes on. The markets don't love you back, so it's like just find a way to use them for what they're for, which is you know preservation of capital, generate some wealth. Risk management is really the most important thing. If you're trading in any way, shape, or form, if you take on the responsibility of I'm going to manage risk, the upside is actually much easier. But anyone that loses sight of that and tries to put profits ahead of the risk, you will get smashed by this market in one flare up, one uncertainty, one tweet, one black swan that nobody's talking about. It's just not worth it. So manage risk first. And it's really nice when even the market does climb through all this noise, you gain from it and you've got risk under control.
Your moment of Zen with Chris Pulver.
Bourbon and risk management. There you go.
That's right. Your bourbon trades on the shelf with all of the Beanie Babies and the Pokemon cards,
That's
the
right. That's
trending
right.
trades.
Yep. All the Lorcana now.
That's right. Well, Chris, thank you so much for your time. I appreciate it and your wisdom. And thank you guys for watching Unfiltered Finance. As always, you can catch so much more on our channel. We'd love to hear from you in the comments section. And as always, click like and subscribe.